Stop what you're doing. Close every other tab. Tell your boss you'll call them back in 12 minutes because the silver charts just crossed a critical line in the sand. And what happens in the next 48 hours will determine whether we're going to $1.05 or $1.60. It's Monday, February 16th, 2026. Silver is trading around $1.75, and the technicals are screaming. Ladies and gentlemen, the American guy here. And I need you to understand something. Right now, at this exact moment, we are sitting on the knife's edge. 3 separate technical analysts just published their forecasts. One is calling for a move above $1.05. Another is calling for a collapse below $1.72. The third is saying we're in no man's land. All 3 of them are looking at the same charts, the same indicators, the same price action. And they're seeing 3 completely different futures. So which one is right? And more importantly, which line in the sand matters? Because if we hold $72.65, the bulls are targeting $1.05 plus. But if we break $72.65, the bears are targeting $1.60. That's a 75% difference in outcome based on one level, $72.65. You need to understand what's happening on these charts. You need to understand the signals because the next massive move is coming, and it's coming fast. Let me break it down. Silver is trading around $1.75 right now. Let me give you the context. 2 months ago, silver was at $1.50. Then it exploded to $121.66. That's a 143% gain in 6 weeks. Vertical, parabolic, historic. Then it crashed, $121 to $73.33. That's a 39% collapse in 10 days. Everything that went up in 6 weeks came down in 10 days. Now we're at $1.75, bounced off the lows, sitting just above critical support. And the question everyone is asking is simple. Is this the bottom? Or is this just a pause before the next leg down? Here's what the technicals are showing. Support levels, $72.65 is the big one. That's where Forex24 Pro is drawing the line. Below that, $70. Below that, $60.05. If we break $60.05, the entire bull thesis is dead. Resistance levels, $84.23. That's the 20-day exponential moving average. Above that, $90. Above that, $105.75. If we break $105.75, we're back in parabolic mode. Right now, we're in the middle, $75. Above support, below resistance, and the indicators are giving mixed signals. RSI, Relative Strength Index. It's sitting between 41 and 47% depending on the time frame. That's neutral territory. Not oversold, not overbought, just waiting. Stochastics, around 25% on the 14-day. That's slightly oversold territory. Suggests we could bounce, but it's not extreme. ADX, Average Directional Index, sitting at 38 plus. That measures trend strength. Anything above 25 means strong trend. We're at 38. But here's the problem. The negative directional indicator is dominating. That means the strong trend is down. 200-day moving average, $50.77. We're well above it. That's bullish long term. But the 20-day moving average is $84.23. We're well below it. That's bearish short term. So what do we have? Long-term bullish structure, short-term bearish momentum, and a critical support level at $72.65 that's about to get tested. This is the setup. Now let me show you what the analysts are saying. Forex24 Pro published their analysis on February 13th. And they are bullish, very bullish. Here's their thesis. Silver is trading in a bullish channel. That means price is making higher lows and higher highs within a defined uptrend. The bottom of that channel is around $72.65. As long as we hold that level, the uptrend is intact. They're watching the RSI. It bounced from oversold levels recently. When RSI bounces from oversold in an uptrend, that's typically a buy signal. It means the selling exhausted itself and buyers are stepping back in. Their target, above $105.75. They're not giving a specific number beyond that. But they're saying if we break $105.75 with volume, the next leg up is coming. Their invalidation level, $60.05. If we break below $60.05, the bullish channel is broken. The uptrend is dead, and they're wrong. Now, let's do the math. Silver is at $75 right now. Their target is $105.75. That's a $37.5 gain. That's 41% upside from here. And how much time? They're saying next week, 7 days. That would be a $4.39 per day gain every single day for 7 days straight. No pullbacks, just straight up. Is that realistic? Let's look at the structure they're citing. The 200-day moving average is at $50.77. Silver is currently at $75. That's $24.23 above the 200-day MA. That's 47.7% above. When price is that far above the 200-day MA, it's extended, it's stretched. Pullbacks are common. But here's what the bulls would say. In a parabolic move, technicals don't matter. Momentum matters. If we're in a supply squeeze, if there's a short squeeze, if there's a genuine physical shortage, price can stay extended for weeks or months. And their key level is $72.65. As long as we're above it, they're in control. So that's the bull case. Hold $72.65. Target $105 plus. Timeline next week. Invalidation, $60.05. Now let me show you the bear case, because it's the exact opposite. My Trade published their analysis on February 15th, 2 days after Forex24.pro. And they are bearish. Very bearish. Here's their thesis. Silver is trading below the 20-day exponential moving average. That EMA is at $84.23. As long as we're below it, the short-term trend is down. Any rallies should be sold. They're watching the RSI. It's at 43%. That's below 50. When RSI is below 50, it confirms weakness. It means sellers are in control. Buyers are not stepping up. Their next support target, the 50-day moving average at $78.89. If we break that, the selling accelerates. Below that, they didn't give a specific number, but the implication is clear. $70, $65, maybe lower. Their key resistance, $84.23, the 20-day EMA. As long as we can't break back above that level with conviction, rallies are just opportunities to sell. Now, let's do the math. Silver is at $75 right now. Their next support is $78.89. Wait, that doesn't make sense. We're already below $78.89. Let me clarify. They published on February 15th. At that time, silver might have been around $77 to $83, depending on the feed we were using. Remember the three-price problem from Saturday? New York showed $77, World showed $83. So if they were looking at $83 silver and the 50-day MA is $78.89, then breaking below the 50-day would be a bearish signal that would target $72.65 next. Below that, $70. Below that, $60. The ADX at 38 plus confirms their view. Strong trend. And the negative directional indicator is dominant. That means the strong trend is down. So here's what the bears are seeing. We rallied from $73 to $83 in the world market feed. That rally failed at the 20-day EMA. Now we're pulling back. If we break $72.65, the next stop is $60 to $65. That's the bear case. Sell rallies into $84.23. Expect breakdown below $72.65. Target $60 to $70. Timeline? Weeks, not months. Now you see the problem. The bulls are targeting $105 plus if we hold $72.65. The bears are targeting $60 if we break $72.65. Everything hinges on one level, but there's a third analyst, and they're in the middle. FX Street published analysis on February 10th. That's 6 days ago, before the recent volatility. But their levels are still relevant. Here's their thesis. Silver is in a wide range. If we break above $90, we could see a revival toward the highs. If we break below $70, we could see further downside. $90 revival. That would confirm the bulls are back in control. That would target a retest of the January highs above $100, maybe $110, maybe higher. $70 downside. That would confirm the bears are in control. That would target $65, maybe $60, maybe lower. But as of February 10th, they were cautious. They were neutral. They were saying, we need to see a decisive break one way or the other. Now, we're 6 days later. Silver crashed from $88 to $73.33, then bounced to $83.58 in the world market, then pulled back to $75 to $77, depending on the feed. So we tested the $70 level. We bounced, but we didn't break $90. We're stuck in the middle. FX Street's analysis is the most realistic. It's saying we're in no man's land. A break either way will determine the next big move. And that's exactly where we are right now. So let me synthesize these three views for you. 3 analysts, 3 views. But they all agree on one thing. There is a line in the sand, and that line is around $72 to $73. Forex24.pro says $72.65. Below that, the bullish channel breaks. My trade doesn't give a specific number, but their support structure suggests $72 is where the real support lives. The 50-day MA is $78.89. Below that is a gap to $72. FX Street says $70. Below that, we're heading to $65. So let's call it $72. That's the line. That's the level that matters. If we hold $72, the indicators suggest we could see a move back toward $85 to $90. If we break above $1.90, the analysts are targeting $1.05 plus. Some are even whispering about $120 again. But if we break $1.72, the indicators suggest we're going to $1.60 to $1.65. That would be another 16 to 20% drop from current levels. And if we break $1.60, all bets are off. So here's the math you need to understand. We're at $1.75 right now. $1.72 is 4% below us. $1.85 is 13.3% above us. $1.90 is 20% above us. $1.05 is 40% above us. On the downside, $1.72 is 4% down. $1.65 is 13.3% down. $1.60 is 20% down. Symmetry. The risk reward is almost symmetrical right now. 4% down to test the line. 13 to 20% move once the line breaks. But here's the thing. Volatility is extreme. We saw an 11% intraday swing on February 4th. We saw a $18.74 range from $73.58 to $92.32 in one session. That's 25% from low to high. So saying we could move 20% is not crazy. We've already done it multiple times in single days. The question is, which direction? And the answer is, watch $1.72. Let me break down what each indicator is telling us, because this is where you separate noise from signal. RSI at 41 to 47%, neutral, not overbought, not oversold. But here's what matters. If RSI is falling while price is bouncing, that's bearish divergence. If RSI is rising while price is consolidating, that's bullish divergence. Right now, RSI bounced from the low 30s to the mid 40s. That's a bounce. That suggests the selling pressure eased, but RSI is still below 50. That means we're not out of the woods yet. If RSI breaks above 50, that confirms bullish momentum is returning. If RSI rolls over and heads back toward 40 or below, that confirms bears are still in control. Stochastics at 25%. That's oversold territory. When stochastics are in the 20s, that typically means price is stretched to the downside. A bounce is likely. But stochastics can stay oversold for extended periods in strong downtrends. So what are stochastics telling us? A short-term bounce is possible. Maybe we rally from $1.75 to $1.80 or $1.82. But unless stochastics break above 50 and stay there, the downtrend is still intact. ADX at 38 plus with negative DI dominant. This is critical. Notice ADX measures trend strength. Anything above 25 is a strong trend. We're at 38. That's very strong. But which direction? The negative directional indicator is dominant. That means the strong trend is down. This is what the bears are hanging their hat on. The trend is down. The trend is strong. Fight the trend at your own risk. But here's the counter. ADX can peak at trend extremes. Now, when ADX gets above 40 or 50, it often signals exhaustion. The trend has gone too far too fast. A reversal is coming. We're at 38 plus. If ADX keeps climbing to 45 or 50, that could be a contrarian buy signal. But if ADX stays elevated and the negative DI stays dominant, the selling continues. Moving averages. The 200-day MA at $50.77 is the long-term bullish anchor. As long as we're above it, the big picture is bullish. The 20-day EMA at $84.23 is the short-term bearish resistance. As long as we're below it, the short-term picture is bearish. The 50-day MA at $78.89 is the battleground. We're currently below it. If we break back above it, that's a win for the bulls. If we continue to trade below it, that's a win for the bears. So here's the summary. Long-term, bullish structure above $50.77. Medium-term, bearish momentum below $84.23. Short-term, critical support at $72.65. The indicators are not giving a clear signal. They're giving a conditional signal. If, then. If we hold $72, then we target $85 to $105. If we break $72, then we target $60 to $65. That's what the charts are saying. Now let me tell you what that means for your money. Let's walk through the bull scenario step by step, because this is not fantasy. This is based on actual technical patterns and analyst targets. We're at $75. We hold $72.65. That confirms the support level held. That confirms the bullish channel is intact. Step 1, rally back to $80. That's 6.7%. That tests the 50-day moving average at $78.89. If we break above it, that's the first confirmation the bulls are back. Step 2, rally to $84.23. That's the 20-day EMA. That's 12.3% from current levels. If we break above the 20-day EMA and hold it for 2 to 3 days, that confirms the short-term trend has reversed. Bears capitulate, shorts cover, momentum builds. Step 3, rally to $90. That's 20% from current levels. That's FX Street's revival level. If we break $90, the technical picture flips from bearish to bullish. The narrative changes from crash and burn to consolidation and continuation. Step 4, rally to $105.75. That's Forex24.pro's target. That's 41% from current levels. That puts us back near the highs. That suggests the bull market is resuming. Is this realistic? Let's look at the precedent. Silver went from $50 to $121 in 6 weeks. That's 142%. So going from $75 to $105 is only 40%. We've already proven we can move faster than that. The catalyst? Short squeeze, physical shortage, industrial demand, central bank buying, geopolitical risk, inflation fears. Any of these could reignite the bull market. The timeline? Forex24.pro says next week for the move to $105 plus. That's aggressive. More realistic timeline, 2 to 4 weeks if the breakout happens. The risk? If we rally to $85 and fail, we're right back where we started, stuck in no man's land. Or worse, we roll over and test $72 again, and the second test is often where the level breaks. So the bull case is hold $72.65, rally to $80, break $84.23, push to $90, target $105 plus. Timeline, weeks, not months. Probability, the analysts are giving this scenario 40 to 50% odds if we hold support. That's the bull case. Now let me show you the bear case, because it's just as plausible. Now let's walk through the bear scenario, because this is where the real danger lives. We're at $75. We test $72.65. The support doesn't hold. We break below it. That confirms the bullish channel is broken. That confirms the February 5th low at $73.33 was not the bottom. Step 1, crash to $70. That's 6.7% down from current levels. That's the next major psychological level. Round number, clean level. Some buyers might step in there. Step 2, if $70 doesn't hold, we're heading to $65. That's 13.3% down from current levels. That's where Fixed Street's downside target sits. That's also where the next Fibonacci retracement level might be. Step 3, if $65 breaks, we're testing $60. That's 20% down from current levels. That's Forex24.pro's invalidation level. That's where the entire 20 to 25 bull market comes into question. Is this realistic? Absolutely. Silver crashed from $88 to $73 in 1 day on February 5th. That's 17%. So going from $75 to $60 is only 20%. We've already proven we can crash that fast. The catalyst? Leverage unwind, margin calls, forced liquidation, risk-off sentiment, dollar strength, equity market crash, deflation fears. Any of these could trigger another leg down. The timeline? My trade is suggesting this unfolds over days to weeks, not months. If we break $72, the selling could accelerate quickly. The risk? If we crash to $65 or $60, retail capitulates. Everyone who held from $110 finally gives up. They sell at the absolute bottom, and institutions buy everything. So the bear case is break $72.65, test $70, break $70, target $65. If that breaks, $60. Timeline, days to weeks. Probability. The analysts are giving this scenario 30 to 40% odds if support breaks. That's the bear case. Now let me tell you what you should actually do. Here's the harsh reality. Nobody knows which way this breaks. The bulls have a case, the bears have a case, the charts are mixed, the indicators are conditional. So what do? If you're holding physical silver with no leverage and a multi-year timeline, do nothing, ignore the noise. The long-term thesis is intact. You're above the 200-day moving average. You're in a structural bull market. Short-term volatility doesn't matter. If you're trading silver with leverage or options, you need to make a decision. Are you betting on the bounce or the breakdown? Because sitting in no man's land is a death. You're bleeding theta if you're in options. You're bleeding overnight fees if you're leveraged. Pick a side or exit. Bull trade. Buy if we hold $72.65 for 2 consecutive days. Target $85 first. Stop loss below $71. Risk reward is 3 to 1 if you're targeting $85. Bear trade. Sell if we break below $72.65 with volume. Target $65 first. Stop loss above $76. Risk reward is 3 to 1 if you're targeting $65. If you want to buy silver but haven't yet, wait for confirmation. If we break above $80 with volume, that's your signal the bulls are back. If we break below $72 with volume, wait for $65 or $60 to step in. Don't try to catch falling knives. Don't FOMO into rallies that fail. Let the market tell you which way it wants to go. The technicals are screaming that a big move is coming, but they're not telling you which direction. The breakout or breakdown will tell you. And here's the most important thing. The analysts are targeting $105 plus or $60. That's a 75% swing in potential outcomes. Based on one level, $72, So watch that level like a hawk. If it holds, position for the upside. If it breaks, protect capital or position for the downside. That's the action plan. It's Monday, February 16th, 2026. The American guy here. Silver is trading around $1.75. The technicals just flipped. The indicators are giving conditional signals. And we're sitting on the knife's edge. 3 analysts, 3 forecasts. Forex24.pro is calling for $1.05 plus if we hold $1.7265. My trade is calling for further weakness below $84.23, targeting $1.65 or lower. FX Street is saying we need a break above $1.90 or below $1.70 to determine direction. All of them agree on one thing. The line in the sand is $1.72. If we hold it, the indicators suggest a move toward $1.85, then $1.90, then potentially $1.105 plus. The RSI bounce, the bullish channel, the 200-day MA support all point to upside if the level holds. If we break it, the indicators suggest a move toward $1.65, then $1.60, then potentially lower. The negative DI dominance, the ADX strength, the failure below the 20-day EMA all point to downside if the level breaks. We're at $1.75. That's 4% above the line. We could test it this week, maybe tomorrow, maybe Wednesday. And when we test it, the market will make its decision. Hold or break, bull or bear, $1.105 or $1.60. The charts have spoken. Now we wait for the market to confirm. Here's what you need to watch. If silver holds above $72.65 for 2 consecutive days, position for the upside. If silver breaks below $72.65 with volume, protect capital or position for the downside. Don't guess, don't hope. Watch the level, let the market tell you. The massive move is coming. The only question is which direction. This is the American guy. It's Monday, February 16th, 2026. The charts just flipped. The line is drawn. And the next 48 to 72 hours will determine everything. Hold your physical if you believe in the long-term thesis. Trade the technicals if you're a short-term player. But whatever you do, watch $1.72. That's the level that matters. Remember to like, subscribe, and share this with anyone who needs to understand what's happening in silver right now. The indicators are screaming. The analysts have spoken. Now it's up to the market. Stay sharp, stay disciplined, and I'll see you in the next one.